Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Today is Thursday, July 16th. Coming into the end of the first 2 week reporting period for the third quarter. Thursday? And of course, we had a bit
July,
of
we're live
16th
on YouTube.
Good to hear. First 2 weeks of the third quarter, also our crazy celestial event, COVID running rampant, cruise lines want to get their cruises back up and running in the face of horrendous COVID numbers. I mean, does anything make any sense in this world? I don't know. My number one message to site members and to the public in general is just don't put yourself into a position that you're not going to be back listening to these videos, should the internet survive. 1 year from now, right? You should make it a goal. 1 year from now, I will be sitting here listening to Brian's crazy rants. Because, I've been doing this 30 years. I ain't going anywhere. It does mean that I like to play from a huge position of strength, so I sit on a huge mountain of money. If I do decide to go in and take a risk in the market, I never take big bets. I'm chicken shit by nature. You know that. And so as a result, hey, I'm more than happy. In fact, I was actually quite pleased. I've already hit my annual percentage return objectives for my personal accounts. And we're only 6 months into the year. So technically, I could just go and liquidate everything and just, come back at the end of the year if I wanted to. And we did do that in crypto with our fun little local trading account. We have an annual return objective, and we smoked that. And that account's been just sitting in cash for now for about 2 or 3 months. And, Bitcoin, is there a hell of a lot to do there right now? Not really. So, of course, we have some incredibly wild events coming up here this fall. Get your popcorn ready. Try and be in a position of strength. See if you can pay off bad debts and stuff like that through the summer here, so that when the shit hits the fan here in November, December, you don't get like eviction notices and stuff. It's gonna be a wild ride here, no doubt about it. For your guys' purposes, I've made this argument for a while now, and I still like the thinking that we're trying to form out some sort of fractal here on the US dollar through this celestial event. And unfortunately, this basically sets the background for everything else. And it looks like, once again, they've tried to pull a big trap setup here. We had talked about this as being a trap because that was a big harmonic level, and boom, they sprung the trap and got everybody all caught, short US dollars, long euro. And I think they did it again here. Same thing. What's interesting is when you look at the euro chart, it actually has a very, very well-defined double top trying to form here. So, only time will tell. But fascinating. Where's my euro chart? Here it is. Here. What a battle up against this high, this high, this high. This is the September contract. We should probably be looking now, I suppose, at December to get sort of a real idea of what the futures guys are thinking. So, we run a fun little plan on the site that just simply trades against horizontal support and resistance. And I got a funny feeling there was probably a nice little short trade that's set up in there to hit that high there, and they're bringing her back down now. But probably, too, the thing that really jumps out at me is, if I was an institutional player, we're actually up in an area where this is actually where I'd really want to actually take my shorts. So we're up in good old Brian's reload zone. You can see they filled in the gap. They painted a top. They created a nice liquidity pool just up top. Nice big fuck you. Little doji, cutie little doji, bastard. And remember our US dollar image. I think that's what this all is. And, if this does play out the way that I think it's going to play out, we basically have this ahead of us. But, we're all students of the market. There's no doubt about that. And I don't really think it's in anybody's best interest to get into the business of predicting I like to do these forecasts and give me an idea. I mean, clearly we have a huge battle level here. This market symmetry study actually could go two different ways, and I put a tweet out to that effect. This could be sort of the it's kind of a fun chart to do. This is what I like. This is what like Brian likes to do for fun. Crazy technician. So there is that fractal image that this range is going to be nothing more than just replicated on this side of the fractal. So that's what that image is. But I have seen in my career that sometimes this consolidation will be just simply replicated going the same direction. This still acts as a pivot, and this is the left half side, and this is the right half side. I mean, you just don't know in this crazy world. What I'll just simply say is this level right in here is sort of the big war zone. If there's going to be a war, and it's interesting because nobody in the media is talking about the US dollar right now, right? No, you don't hear any politicians jumping up and down and pulling their hair out. Usually they only do that when we're in this sort of phase after the dollar's gone absolutely nuts. We're in a very quiet window here where I believe massive bets are being placed on the US dollar. It was interesting because today is baby powder report day on TRI. And that means our report from Asia. Julian's located out of Thailand. And he was showing us the chart of the Thai baht. And frankly speaking, if I was someone who was going to take a risk in the world right now, I think Asia is the last place in the world I'd want to take risk. It's so uncertain. He was telling us, of course, the tourism industry in Thailand has completely collapsed. And he was also saying, too, and I do find this interesting, that because of this globalization trend over the past 20 years, and it started after the dot-com blow-up and the war on terrorism and this sort of buddy-buddy relationship with the United States and China to build out their economy into the 2008 Olympics. That's where this whole trend started. He was saying that he actually finds that a lot of the local Thai population, they've been lulled into this false sense of a very odd reality that we lived in there for about 5-10 years, where people were living completely beyond their means. And he was even saying today that a lot of local Thai people, they actually won't put up with a certain low standard because they're so used to a very, very high Western standard. In fact, it got so bad that the locals were doing so well off the tourist trade and the real estate development trade in China, blah, 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 that they actually demand even higher and better service than the West. And they're finding that, oh, gee whiz, all the West's money has disappeared, and now they're going to have to go back to living the way that they used to live. I think you're going to find this might be a trend in the international community for quite some time now, so be prepared, everybody. I think I said I took a trip over to Europe in the summer of 2018, I think it was, and I continually kept referencing that it just felt like people were living really, really high standards of living, very high lives, like driving brand new cars, only eating vegan, right, being very particular and paying really ridiculous prices for these specialty foods. It just felt like we were living in some sort of funny bubble, and it does feel like that bubble is popping now. All right, so rant aside, this is just an interesting commentary. I still am leaning towards this camp, but, strong opinions, loosely held. I mean, if this does start structurally breaking down, I could very easily see us follow this path. This path would be like everything's fine, world growth, kicking ass, lots of demand, for commodities, lots of international trade, rah, rah, rah. Now, I mean, in reality, Is that what's going on in the world right now? I don't know. And then, of course, this is, oh man, maybe things aren't nearly as rosy as we've painted. And of course, the risk appetite of the world is backing off, and people are just walking away from the market, just getting out of risk. I still think that this is what our future is, but we'll see. We're definitely at an inflection point, so keep your eyes peeled, folks. This should be a really interesting tweet to follow along. Who wins, the Bulls or the Bears? And I think I've sort of said this recently, and my apologies for being so long-winded about this. This next, I remember I said this yesterday. I don't want to move this because this was took a while to put in place. But this little window here over the next week is actually hugely significant. And yet the irony of it all is the public, they're not even paying attention. Anyway, we'll see what happens. Only time will tell. Right now we have a bit of a risk-off day. US dollar index is rallying now. I probably got a bunch more trap bears in here, Euro bulls. So we should probably see things like stocks are probably a little softer. Commodities like crude should be a little softer. But interesting through this, we're noticing that the fear assets aren't really jumping up the way that I would have thought they would. But, again, I think over this next week, we could see some really wild, funny action in here. And keep in mind, it is the middle of the summer. All the pros are technically gone. So don't be surprised if this is really choppy here for the next week or so. But hugely important battle zone. Stocks here, they jumped up yesterday. But interesting, tech is leading the charge here in the stock market. And tech is just running into just a world of traffic. You can see how we came right up against those previous highs there. I think we took that high out. That might have been just nothing more than just a stop run. That says 32.31, and our high yesterday 32.33 and a quarter. So ding, 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 ding. Run those stops, and then in comes the top, and back down she goes. I don't know. Tough to say. I wouldn't be surprised. Summer illiquidity. We're probably seeing some people ringing the register. This should be an interesting, since this did go to a new high here, don't think we can call that a harmonic. Believe it or not, the next one I think off of this pattern would come in at about 127. So we could still see a little bit higher. And then like we said before, 1.618 actually would be the ideal target. And believe it or not, this would be that sort of US dollar breaks down on the chart, risk appetite increases, and stock prices keep charging higher. So who knows? Only time will tell, that's for sure. Little bit of a soft day, but interestingly enough, some kids on the site actually were banging out some pretty big wins today. So congratulations to those that had their stocks move higher on the day. Crude just still continue to play around at this old level. There was our second short attempt. I had told you guys that we'll be rolling over into the September contract now. So that trade, we'll just sort of keep our eyes on it. You might find that August actually perks up to new highs. It wouldn't surprise me. But if I was trading this, and we said we were going to sort of walk through a demonstration of how this would work. We're now on over to, where the hell is it? Over here. So we're in the September contract now. And again, you can see there was that gap. So this is just all the appropriate levels. We could get stopped out here very easily. One thing I noticed about this chart, especially September, is this gap. And we've kind of talked about it. Gaps really do want to be filled in. So could we have one more little pop up top here to run the stops and fill that gap in? Totally possible. So we'll just keep demonstrating how to lose money like a professional, and eventually a top will come in and we'll show you taking profits at 50% roll, and then we'll add up all the ticks and see whether this was worth our while. That's usually how a lot of pro traders sort of look at trades, is they're going to take a few attempts. And, getting stopped out, sort of the cost of doing business. Could this risk maybe have been a little too much? Well, it was a double top, so what the hell. I do like these stabs right up against the top end of the range, so I don't really mind these sort of like few little nice stab, but then you got to make sure to keep following this so that when the market does break, you capture this big move. But anyway, we'll see how that goes. This second attempt is still working. Just big hurry up and do nothing. There's that Nasdaq that we talked about. I remember I said the U.S. tech stocks looking super bull. I think you could make the argument now, nice big honk and almost like a diamond pattern now. So how we resolve the other side of this diamond probably is our clue, and it really hasn't broken down yet. What you'd have to say here as a technician is there's the top end of your range, and there is the bottom end of your range, and a resolution of that range will tell you where we're going next. And kind of like this, you see how we go boom, boom. Yes, this is a fractal, but do you really want to go short down here, having to risk all the way up top? And sure enough, doink, they stop you out. So, I mean, does it really make sense to hit this if this big range fails here? I don't think so. You'd probably have to wait for reload zones and all that kind of fun stuff to actually get short. And if it just pukes out, well, you just missed the trade. Shit happens. I have been watching the U.S. stock market, all the bear ETFs slowly putting in their bottoms. Haven't seen anything really solid just yet. Like I said, I think we have to get through this week on the U.S. dollar index, let all this stuff sort of start to show us. You can see the yen is really flirting with breaking down here. So what I'd really like to see is some clear direction out of the trading pairs to give me a clue as to which way this thing's really going to go. And then we can start framing expectations on things like stock indexes and commodities. Our dashboard here probably also a really good example. Yes, we did cross bullishly. Now the moving averages are a mile or two apart. We could see a period where you see short-term bearish, Dow's down 20 points on the day, 30 points on the day, Nasdaq down 5 points on the day, blah, blah, blah. And while this thing slowly works its way back up. That's sort of what I'm thinking. I don't think the break is here. This is more of that violently flat kind of market state. Drive you crazy. And I think that's what's going to happen through the whole summer. This is going to drive everybody crazy with just to hurry up and do nothing. And if anything, I don't know whether you can see this now, but I really like this thinking. I've liked it all along. You see how Bitcoin went zipping up, then M'd out, had another little fuck you up top, and then started to M out, and it's kind of yawning, rolling over. I think you're going to see the same thing in the stock market. So this point here corresponds with that. This rally here corresponds with that. The fuck you move to new highs, that corresponds with that. So my hunch is stocks are going to M out here and just slowly over the next month just grind lower, just drive everybody crazy here. Seems perfectly logical to me. I was sort of saying the other few minutes ago, one thing that sort of puzzles me about all of this, gold actually looks a bit heavy up top. Remember we looked at that yen just a moment ago. It's starting to look a little heavy up top. So what does that mean? Does stocks have one more push up top here? Fuck you to finish this kind of talk up here before these things actually start firming up. And, we looked at the gold and there's some awfully big gaps in that gold chart. It looks like gold's getting a little dangerous here in the short term. But as we sort of talked to you guys recently, I mean, if you trade these big bot setups that have like, $100 trading range, I could easily see gold pull back $50, no problem here, right down into key support. In fact, through the daily brief, we basically said if you wanted to be a buyer of gold, you probably want to target right back down here, good old reload zones. And because we have not hit the 50% level on this massive bot, I can still actually entertain the idea of buying this if we do actually bottom here, looking to continually look for that $2,000 upside. But in the short term, oh boy, that's looking awfully nosebleedy. Very dangerous. And maybe, you get that crude oil pops up one more time, fills in the gap up top. That's the event that lets gold and silver and stuff come back down, clean itself up. And then that's your pivot. Who knows? Anyway, as market technicians, our job's just simply hunt your setups. Just keep showing up day in, day out. Do your thing. Risk on, risk off. Remember we had talked yesterday, and I don't know, with this crazy stock market, now the US dollar's so close to a pivot. Do we really want to get too enamored with one-day breakouts here? Still within this big M, so we're still looking at Kevin's outside upside reversal bar here with a jaundiced eye. Did they do nothing more than just bring this thing back into trendline resistance? I don't know. Not really the best kind of image for me to want to get bullish. But I will say there's one part of the market that's starting to look interesting to me. If, big growth and tech stocks and all that kind of stuff are kind of waffling, is there any part of the market that does well that's not economically sensitive? That's the pharma sector. I think I had showed you this one stock about a month or two ago. It was working its way higher. Beautiful breakout. They had news pending. And you can see they just fell out of bed. When they fell out of bed, I have a simple rule that says I don't really like to see a winning trade, and it just missed my double level by a hair, typical. I don't like to see a winning trade turn into a losing trade, so I just walked at scratch. But lo and behold, look at what they're doing here. So I'm actually going to go back in and try and buy myself back into this trade. Whoops, that's not what I wanted. Let's see if I can show you the candle. There we go. So, I don't know. Hopefully you guys can see the double bottom trying to form down here. It's a really cool example of what they call a hook setup with the RSI. RSI has made a nice little W in the oversold zone. So, a guy like me, I'm going to try and sneak my way back in off this original clothesline W here. If I can get in, awesome. If I can't, no biggie. And actually, I kind of like the risk window down here. So you can see there's an old key low. That was probably just a big FU low. And then there's also this low here. So we're down into an area where I think those guys, them, they got a vested interest in defending this. So, and you tell me, if this thing gets its act together and goes back and fill in that gap from the other day, can we double our money? I think so. So this is in the pharma sector, and of course they just had bad news, so the stock was ripped on a trial failure. But these companies have lots of stuff in the hopper, so it looks like they've got a new project on the go. And I've got a W, Brian and his crazy W, so I thought I'd mention that to you guys. Do your own due diligence, not telling you what to do, I'm just showing you what I'm doing with my money. I'm heading on over to the corn. Yeah, it kind of fell out of bed here this morning. I mean, I've told you guys repeatedly, my target, as long as this high right here is not taken out, still has to be down here. Looks like we got new M's coming in here. You can see up, down, up, fail. We went through that low. Sure looks to me like this candle body level is pretty darn important to the market. What is that? 92. Yeah, that makes sense. So 92.50. Pretty important psychological number. Little bit of trend line support down in here. It's not a hell of a lot, but it is there. Still think we're in a ranging market. And as I'd sort of shown you earlier, kind of that violently flat summer of 2000, massive distribution. Smart money distributes to the weak, stupid money public. And then we set up for a very normal, they don't call it the fall for nothing, dip into September, October, November, all those crazy political events, all that seems perfectly logical to me. So I think that's my expectation. Nothing's really changed here. The only problem for those people that are in a super hurry is I don't think they're really going to do anything here until we get into sort of September. So I wouldn't be surprised if we still see a lot more back and forth, violently flat kind of market state. Dips down into probably, the high 8,000s, low 9,000s. I think they're going to find some buying support. Rallies up into the 10,000s, let's call it. That to me looks like a great resistance area. And it's just more hurry up and do the same. If anything, it's been kind of relieving not having to be worried too much about Bitcoin over the past few months. Just a big hurry up and do nothing. Can't push a chain, and I don't think it's in any of our best interest to actually really try and push this chain. Just let the shit develop the way it's going to, and react when you happen to see your criteria that you like to see to justify you spending your money. Kind of like I like to see W's, I like to see RSI W's, I like to see oversold, I like to see the 50% bounces, gonna double my money, all that kind of stuff. When you see this stuff come in, all according to your trading plan, maybe I trade M's, 50% levels are lower on the gold, whatever, then you act, right? It's your setups. Other than that, if you don't see that stuff, really your job's just to do nothing. So anyway, looking at the alts themselves, I did hear some chatter about scams on Twitter. Kind of took the wind out of crypto sales there a little bit. Maybe even was part of the reason why we saw the big boys all sort of come off here in unison. So there might be that. And gee whiz, that M now on Ethereum's looking awfully tough here. And, like the problem I have for crypto is I just don't know what the catalysts are going forward that are going to drive bullish expectations. Did see it interesting, like we were sort of talking fun stories about things like Linked and stuff. Oh, maybe Satoshi Nakamoto is actually the lead developer of Link. Could it launch into sort of that orgy of buying? It could have. Don't like to hear those kind of scandal kind of things, and that Twitter scandal stuff kind of bothered me a little bit. And also too, if I'm not mistaken, Binance and Trex, probably Poloniex too for that matter, and maybe some of the other sort of sketchy altcoin exchanges are going through another one of these big delisting culls. So that might pull sort of the some of the bullish inertia out of the market here as well. So put it all together, not really overly enthusiastic about spending any new money in the crypto space. And my simple message, it's so easy and yet it's so impossibly difficult to convey this to the public. Is this really the best time of year to be loading up on risk assets? Probably not. Kids, maybe I'll have no school this year. Wouldn't that be awesome? But it does make sense that this market is most frothy and most blow-off toppy in the summertime when all the kids are in mom's basement trading their cryptocurrencies. So I do understand that this is when the market is most enthusiastic, most euphoric. You do get some pretty crazy blow-off toppy kind of moves. But at the same time, too, try and put into context the time of year, right? Simple, just write this down. Buy when it snows, sell when it goes. We are definitely in the when it goes time of year. So on balance, if I can, of course, I am liquidating, selling into strength, and ringing the register. So that's the kind of market state it is right now. I don't really think I have any new ideas in crypto right now for you because I'm very leery about putting anything new on right now. So slow and steady wins the race. Trade your setups. Live by the sword, die by the sword. How many other cliches can I throw at you? Be damn careful with these altcoins right now, especially if they're on these sort of shit list with all these exchange listing, delisting stuff. I notice you're getting some phony baloney action in some of these. Maybe, like I said, this isn't the best time of year to be buying assets, risk assets anyway. So I don't know whether this almost feels like a perfect storm where they might generate some false volume to try and keep these coins on these exchanges. You go, woo, W's breakouts. But it's really bullshit. And then the goddamn exchange goes and delists the coin anyway. They used to call these in years gone by exit pumps. So be forewarned. I see a lot of that kind of activity in the market, which is not the kind of low risk, keep it simple, Don't have to think a lot. Market's washed out. We're not in that kind of environment right now. So be careful, everybody. Okay, I think I'll leave the rant at that. Sure hope you got some value out of something I said today. PMA for the win. All the best. And the only thing left for Brian to say at this point is a big bye for now.